Hello traders, Doc here. In this video I will show you some examples of my previous analysis and also explain how you can trade without using any indicators. First example that I want to talk about is this US dollar Canadian dollar analysis. Back in October 8th I shared this analysis and I said that I expect to see a bearish move. As you can see, bearish move occurred, and now let me show you the reasons why I expected to see a bearish move. First, we can see this massive bullish trend here, and then price started to consolidate here. So we can clearly see that price formed this resistance zone and this support zone. Then strong bullish pressure occurred and price formed this massive bullish candlestick. But next, as you can see, price went down to retest this previous resistance. We can see another very strong bullish candlestick as a reaction, and price formed another move up, but just enough to test this previous high. We can see this massive momentum bullish candlestick, but it failed to break this previous high and formed strong bearish move. Here price broke this previous resistance zone and also this previous low, only to retest it here. As you can see, price formed this massive bearish weak rejection. So basically here what we have is a double top pattern. Price formed strong bullish move and then went down, but then up again to test this previous high. Then bears took the control and pushed the price down to break this previous low, which is also called a neckline. So price broke it here and then went up to retest this neckline. And this is what happened here. And after this retest here, we can see a massive bearish reaction where price went down to actually break this previous support. And this is the time where I shared my analysis and I said that I expect to see a bearish move. As you can see, bearish move occurred just to form this new support zone and new resistance zone. So basically here we can see another consolidation area. The main reasons why I said that I expect to see a bearish move are this double top formation here, neckline break and retest with these bearish weak rejections, and finally this massive bearish candlestick that also broke this previous support. All these reasons indicated that bears are gaining the control and that price is about to reverse. And as you can see, price went down. We can see another consolidation zone here followed with a massive bullish candlestick break. As you can see, this break was very strong and pushed the price up to test this previous support. So now we can call this zone a significant zone because here it acted as a support, then price broke it, and then here it acted as a resistance. We can see that bulls failed to break this zone and that bearish pressure occurred here. We have a strong bearish candlestick, then bulls tried to push the price up again but failed. As you can see, another massive bearish candlestick formed here. Looking at this price behavior here, now I can say that I expect to see a bearish continuation and possible test of this resistance and even this support. My guess is that price will continue to go down and test this price here, 1.35900. Let me know down in the comments if you agree with me and expect to see a bearish move. Next we can see this New Zealand dollar US dollar analysis, where I said that I expect to see a pullback and then bullish continuation. As you can see, this is exactly what happened. Price formed a bearish pullback to test this previous high and also this zone that I marked as a potential bullish pressure, and price formed this massive move up to test our resistance zone. We can see this massive bearish move here, and then big fight between bulls and the bears occurred. As you can see, we have series of massive bullish and bearish candlesticks, and you definitely want to avoid to trade here, but we can see that price failed to break our significant zone. This zone can be seen on 4-hour time frames, where we can see that here acted as a support, then resistance, and then support again, and again here. Also you can see multiple massive bullish weak rejections here that indicate bullish pressure. Eventually bulls won this war and price went up. It formed a series of new higher highs and higher lows. Here I noticed that I can connect these previous lows with a bullish trend line. This is the first touch, this is the second touch, and this is the third touch. So now we have a bullish trend line here that connects our higher lows. And then eventually price formed another bullish move that broke this previous high and formed a new higher high. And this is the time where I shared my analysis and I said that I expect to see a bearish pullback followed with a bullish continuation. Basically, price retested this previous high just to form a new higher low. Then we can see this strong bullish candlestick formation, followed with a massive move up that broke this previous high. Price went all the way up to test our resistance zone, and as you can see, it formed this nice bearish engulfing candlestick pattern that indicated a bearish pressure, and after that we can see this massive bearish move. Also, it's easier to see this resistance zone on a 4-hour time frame, when we can clearly see that this zone here acted as a support, then price broke it and retested here. So we have this significant zone, but I call it resistance because of this previous high here, and as you can see, price tested this high and failed to break it. Even on a 4-hour time frame, we can see this massive bearish candlestick here. It was clear indication that bears are taking the control. So the main reason why I said that I expect to see a pullback followed with a bullish move is a simple trend continuation. Because here we can see a strong fight that bulls won and pushed the price up, formed a series of higher highs and higher lows, and after this strong bullish move here, it's reasonable to expect to see some kind of a pullback, and it is very likely that this pullback will end at this zone here that acted as a previous high. That is exactly what happened here, and after this strong bullish candlestick formation, we can see that price continued to go up and even broke this previous high. So here we can see a simple higher highs and higher lows formation. Price tested our resistance, and bears took the control and pushed the price down to break our bullish trend line and also this zone where price formed this higher high and this higher low. I didn't expect to see a very strong bearish move like this, but it was a reaction to a news, and as you can see, price is now testing our significant zone, and we also have this support zone just below it. At this point, it is very reasonable to expect some kind of a bullish reaction. So I will not look to sell when market opens, I will wait for some kind of a bullish pressure or maybe break and retest of our support or significant zone. Next, I want to show you Australian dollar US dollar analysis and the place that represented a good sell opportunity. We can see this massive bearish move that ended here, where bulls gained the control and pushed the price up. Then we can see this series of higher highs and also higher lows. If you look closely, you can see that we can connect these higher highs and higher lows with the bullish trend lines. And here we can see a pattern called bearish rising wedge. If you follow me for some time, you're probably familiar with this pattern. We can also see that price retested here this previous high and continued to go up. Price then broke our pattern, which was indication of a bearish reversal. Price went down just to test this zone that acted as a support here and resistance here. Then price formed a minor move up to retest this zone where price broke our pattern. We can see that price failed to break it with this massive bearish candlestick formation. And ideally, this is a place where you want to sell and put a stop loss above this zone. But the place where I would say price definitely confirmed a reversal is this break here, where price broke this significant zone that acted as a resistance, support here, and then support here again. So another good entry would be to sell here and put a stop loss above this significant zone and protect us from a potential retests. This time bearish pressure was very strong and retest didn't occur, so price basically fell down to test this previous major low. Now we are looking at the 1 hour time frame, and we can see here that price broke our pattern. It formed a massive bearish wick rejection, and immediately after that it formed this minor resistance here that also price tested here and failed to break. Basically you can just enter when price breaks this wedge pattern and aim for some of these previous major lows. So we can just keep the thing simple here and enter after a breakout. But if you look closely on a 1 hour time frame, we can see that price formed this minor resistance here. It then tested our significant zone that acted as a resistance and support, formed a minor bullish move just to test this resistance here, and as you can see it failed to break it and go up. But how do we know when to enter? After this one, after this one, or after this one? Well, actually we don't know the real answer to that. But what we know is that we need to use a high stop loss to put it above this previous resistance, or ideally above this major wick rejection here. So it doesn't matter if we entered here, here, or here, as long as our stop loss is above this zone here, we are good to go. But there is one tip that can help you to decide when to enter. Here we can see a market divided in sessions. This is not an indicator because market moves within these sessions. We have this Asian session, we have London session, London and New York session overlap, and then finally we have New York session. As you can see, first engulfing candlestick pattern occurred in the middle of the Asian session, and it's very likely that you will not be able to enter here. But the session that is very active is a London session, and as you can see, when London session opened here, price formed this massive bearish candlestick and basically formed another bearish engulfing candlestick pattern. These three sessions are very active, and especially this overlap here between London and New York session. So now when this happened at the beginning of our London session, it is reasonable to expect to see a move down. But even if you entered here or maybe after this bearish engulfing here, it doesn't matter, because as I said, what is important is your stop loss placement. Basically you want to give a price some space to move and potentially test this resistance zone again. And that's why I always recommend to use a little wider stop losses to give a price some space to breathe. In this example, let's say that you decided to enter after this second bearish engulfing candlestick pattern. So you want to put your stop loss above this wick rejection here, and you can aim for some of these previous major lows here or here, let's say here. As you can see, price didn't continue to go down immediately after this bearish engulfing, but actually formed another wick rejection, another confirmation of this resistance zone, and then finally massive bearish candlestick that confirmed bearish reversal. Also, you can enter after this massive bearish candlestick here and put a stop loss above it, aim for this previous low here. By putting your stop loss here, you will prevent yourself from a potential retest of this significant zone. As you can see, both these entries represented a good levels to enter because price formed this massive bearish move and continued to go down. And of course, as I said at the beginning, you can just enter after this break here and put a stop loss above this previous major high and aim for some of these previous major lows. As you can see, this is another example where we didn't use any indicators. This is Euro-Japanese yen that I shared in my free Telegram channel. You probably saw it if you're a member of this channel. And as you can see here, I said that price formed this bearish wedge formation and that it's possible to see a bearish move, especially because price is testing this major resistance zone. Now if you look here, we can see that this is exactly what happened and price formed this massive bearish move. So first price formed this massive bullish move and then formed this consolidation area where price moved between this resistance zone and this support zone. Eventually, strong bullish move occurred and price broke this resistance and continued to go up. Then we can also see this minor higher highs formation and higher lows formation. When we connect these highs and these lows, we get this bearish wedge pattern, the same one that we had in a previous example. But what is very important here is that price tested this resistance zone. If you zoom out, you will see that price tested this zone multiple times and failed to break it every single time. So this zone acted as a resistance here, 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 and then finally here. Of course, for some additional information, we can always scale down on a lower time frame, in this case 15 minutes time frame, and we can see that price broke our wedge pattern here and actually retested it. If you look closely, you will also see this resistance zone here on a 15 minutes time frame that price failed to break once, twice, 3 times. So after this confirmation here with this massive bearish candlestick and also a break of our pattern, we can say that bears are gaining the control, and after this retest and move down, it was obvious that bears took the control and now it is the right time to look to sell. Basically here you can enter after a breakout, put a stop loss above this resistance zone, you can enter after a retest, or you can enter after this pullback and this strong bearish wick rejection, or possibly even after this strong bearish candlestick with a bearish wick rejection. Any entry here would be nice as long as your stop loss is above this resistance, or in this case you can put it above these wick rejections. So if you decided to enter here or here, you need to put your stop loss above this previous high. And if you decided to enter maybe here or after this wick rejection, then you want to put your stop loss above these wick rejections and to aim for some of these previous lows like this low or maybe this low here. If you go back on a 1 hour time frame, we can also say that good possible entry was after this breakout here with this strong bearish candlestick and of course stop loss above this previous high, and we can aim for this previous significant zone that acted as a resistance here and support here. So ideally this is the trade that you want to take. If you're a swing trader and you want a higher profits, you can also aim for this previous support here, but you're good to go as long as your stop loss is above this previous high. Of course, I don't want to paint a picture that I'm perfect trader and that I don't make any mistakes, because there is no such thing as a perfect trader and perfect trades, and your goal should not be perfection because such thing doesn't exist in a forex market. So I just want to show you a quick example here of a New Zealand dollar Japanese yen analysis, but this time it didn't work out as expected. Price formed this massive bearish move that retested our significant zone. This zone here acted as a resistance, then support, and then support again. Plus we have this bullish trend line here that connected all these previous higher lows. So to me it was reasonable to expect some bullish reaction or potential break and retest of this zone, because as you can see we have a very strong bearish move here. So I said that I expect to see move up or potential break and retest, but as you can see that didn't occur. Price broke this zone and it looked like a retest, but eventually price broke it again and continued to go up. So basically this analysis was not successful. The reason for it is this massive bearish candlestick formation, and this was a reaction to the news. At one point this was a massive red candlestick and then bulls pushed the price up and formed this massive bullish wick rejection, and my analysis fell apart because of it. I wasn't expecting such strong bearish move, but this is exactly the reason why I recommend you to use stop loss always, and also to have very reasonable risk when you enter a trade. Just imagine that you decided to sell after price retested this bullish trend line and significant zone and that you didn't use stop loss. Here I showed you how you can analyze and enter trades without using any indicators. I hope this video helped you to understand market a little better, and if it did, please like and subscribe so I can continue to make more videos like this. Thank you very much and see you in the next video. Bye bye.